Hi to everybody once again. We decided to come once more today now with a kind of new strategy, short strategy in the dollar yen. Why we decided to sell dollar yen today, and despite of our approach to wait for tomorrow's United States Consumer Price Index data, and why we decided to sell dollar yen before that event now. That's because we have a kind of very strong feeling that, first of all, the selling pressure on the dollar yen as well as other Japanese yen crosses are intensifying at the moment, and as you can see now, dollar yen trading below 107.50, and it seems that very soon the lows of 2017 around 107.32 will be tested and probably broken. What does it mean from a technical point of view? Let's discuss this some later, but first of all, let's cover the fundamental point why we decided to short the dollar yen right now. Tomorrow CPI, United States CPI reading should come in at approximately the market expectations is regarding the absolute number plus, as I remember, plus 0.3%, and the core CPI should come in 0.2%. Let's, for example, imagine that the number will be better than the market expected. And for example, the core index will come in plus 0.4%. Thus, support an idea, support the previous inflation figures we have in the United States. For example, if you remember why this kind of correction in the stock market began, it began when if you remember, the wage earnings came in higher than expected on the Friday a week ago, and especially from this moment the correction started, and still we have a lot of vulnerability and volatility in the stock exchanges right now. Let's imagine that the CPI reading will come in better than expected. What does it mean? We suggest that it will have a kind of very great kind of bigger impact on the yen crosses. We suggest that, first of all, in case of such reading, for sure the market should reevaluate the interest rate path of the Fed in the higher side, on the higher side, and it will mean that probably this year 2018 we will see not just 3 rate increases conducted by the Fed, but probably 4 or even 5 of them. That's depending on the situation. If the inflation in the United States will accelerate, for sure the Fed should react. But of course, it will be very important how the stock market will react to this kind of data. And we suggest that the stock market will come under increasing selling pressure, and we could see another kind of collapse in the stock exchanges in that case. And the correction should intensify and should accelerate. And that will mean just the spreading of risk aversion around the globe, and by so should support the Japanese currency. And we suggest that the Japanese currency will appreciate, not the American currency, despite of the fact that, of course, higher interest rates should mean higher return on the currency and should mean that the currency should appreciate. That's why we decided to sell today. Let's take another approach to the question. Let's imagine that, for example, tomorrow the data should come in, for example, around the expectations or even below of them. We suggest that in that case the dollar yen should correct to the north. And that's why we put a kind of stop loss, a very close one, around 108.50. If you can see 1 hour chart, we suggest to put our stop loss above 108.50, because in that case probably the market will postpone its further testing of the lower side in the dollar yen. But we hope that if the situation will come as we suggest, and for example tomorrow the data will come higher, that will mean just one thing, that probably the dollar yen break below 107.40, and we suggest that we will test the waters below the support line even today and during the Asian session today, probably after a kind of small correction, but even without it. And that will mean that we will see lower levels. Probably not directly we will go to test this kind of trend line we drawn from the lows of June 2016, when the low was below 100, if you remember, around 98.95. Anyway, we suggest that sooner or later the market should retest this line, and that's why we put a target around 105.80. So at the moment that's all. Tomorrow we will come back once again to cover such kind of topic, how the situation will develop around the CPI numbers and how the market will react to this. But once again, we position ourselves from the point of view of risk-reward considerations, as well as how the market will react to the increasing risks or decreasing risks in the global asset markets. We wish you a lucky time ahead, a nice evening. That's depending on you. You will follow our recommendation or not. But just for your opinion, we short dollar yen at the moment. See you later, and bye bye for now.